blocks to consistent trading tonight, and I think this is going to be a good webinar to help keep us consistent with our trading. So I'm hoping that some more people will join us in a minute as well. So I'll pass it across to Ken. Good evening, Ken.
Thanks, Derek. Hi, Irving. So we missed you yesterday. It was most of the guys turned up, and there's a few that are, some other guys are supposed to be turning up today. So I don't know if that's going to happen. But today was, I think, the same subject that we spoke about last week when you were with us, because the Monday night group is behind our team meeting by 1 week. So I don't want to cover any stuff that we spoke about last week's, but fireworks night. So how did you go with the? How did you go with quantifying the two different systems that you had running at the same time, Irving? Did you get any of that done? Were you able to spend some time on that? Irving? You there?
Oh.
Yeah, there you go. All right. So what? So was it profound enough to be able to make a definite decision going to do the first one? So you're going to scrap the second one, and stick with the first one. What do the numbers tell you personally? All right, excellent. So you want to maybe speak of any other barriers to being consistent yourself, Irving, and if you have something to share, good. If not, maybe Derek can add something from this week's trading. Also speak a little bit of the revelations that he said that he had come across over the course of the last week, which he just told me now he feels like he's turned a corner in his own trading. So maybe it'd be good to hear from Derek as well, to share a little bit of what's happened to him over the course of the last couple of months and what it's culminated in. How about Derek?
That's a good idea, Ken. Yeah, I'd really like to do that. Right, where do I start? I feel that since I started mentoring with Ken, it started out quite well, really, and then I kind of got into a losing streak, which really sort of dumbed down my expectations. You know, it kind of, it was a bit difficult to deal with. It was like I was coming and losing almost every day that I traded, and it was quite sort of mentally tiring, you know, in the sense that you think, I'm just going to go on there and probably place another losing trade, and it kind of doesn't feel like you're getting anywhere. Although every time I write off to Ken, he says, "You're doing okay," because you know, I mean, it's his expectations versus mine, whereas Ken is trying to get me into trading, or trying to get us into trading, the feelings of trading, what we experience when we trade, whereas me, myself, I guess I'm not the only one, but we're all kind of thinking, we want to see ourselves winning more trades. And like Ken has said, it's like putting the cart before the horse. So that's kind of what I've been going through. Now, I have actually been taught my trading system by someone else. He is actually a member of the Forex Traders and Coders for Profit group. I don't know that he's a member for the Peak Profit group, but he has taught me a system which I've never really mastered, and I've been trading on and off for a while, sometimes with success, sometimes without so much success, but I've kind of been cutting corners, and you know, prior to meeting Ken, I was trading it for quite a while on demo accounts during the daytime, and what I've been taught to do, or what I was taught to do at the time, was to build a narrative of the market. So you go through, you look at the price action on the chart that you're trading, i.e. with myself it's a 1 minute chart, and you go through the 1 minute chart and you literally build up a narrative for what has happened during the course of that day. So you look at all the significant levels, you'd look at where buyers come into the market, where sellers come into the market, then you'd look at what happened to the buyers, what happened to the sellers, do they get trapped in or whatever, or do they end up taking profit going out of the market, whatever happens. You mark off the levels, so you've got some support and resistance levels there you're gathering at the same time. Maybe some trend lines, some pitchforks, that kind of thing. You know, all traditional technical analysis, really. But you build up this narrative for what's happening with the various buyers and the sellers. You know, does price have enough momentum to break various different levels, or does it fail to break levels? All that kind of thing. So I hadn't really been doing that, and I think what happened was, particularly this time round, I was kind of coming in from work, switching on the PC, going through, I don't know, a dozen different currencies, and really just looking for a setup without actually taking time to study the market and fully appreciate what had gone on during the course of that day. I was doing some technical analysis on longer term time frames, so I'd probably look at an hourly, look at a 4 hourly, maybe a daily, and draw some trend lines or support and resistance levels. But that really wasn't cutting it, because from those higher time frame charts, I was literally diving into a 1 minute chart and just looking for a setup, and really just taking that trade, and maybe not even being that thoughtful to my timing of entering the trade as well. I might enter it too soon. I mean, I placed a trade tonight. I still did enter early, I must admit. I entered early, but at least I'd done the prep beforehand, and the trade went well. It took a little while to roll over, but it didn't go more than sort of 2 or 3 pips against me, so it was very good. You know, it didn't put me on edge or anything like that. And I think I started doing this. I think it was Wednesday. I said to myself, "This is not working," you know, it's probably better to say that the fact that I wasn't doing the whole thing, I wasn't preparing the narrative beforehand, I wasn't taking that time to really study the markets on the 1 minute chart, because I have been told by my tutor that the devil is in the detail, as he put it, you know, and I think he's absolutely right. You know, if you study those, I'll answer that question in a minute. If you study those charts, you can see the devil is in the detail when you build that narrative. And I wasn't taking time to do that, and I was sort of sitting there thinking to myself, this isn't working, or the fact that I'm not doing it properly certainly isn't helping. And I felt that I really had to start doing that narrative. So I started doing it I had a go at doing it Thursday, but I failed miserably and ended up just jumping in and losing. I did it properly on Friday. I took a long trade when, in actual fact, I'd done the narrative. It told me it told me that the sellers were in control, and yet I still went and took a long trade. And then I ended up thinking to myself afterwards, that was silly, because who am I to think that I'm better than all those other longs during the day? Because when I was building the narrative, I looked through, and just about every opportunity to take a long trade during the course of the Friday, during the course of the Friday, it had failed. You know, they failed miserably. You know, if they were in for 10 pips, they got 9 and probably then got trapped in because the price turned tail and went back down. You know, but you know, I saw this triple bottom, and I still went in and took a long trade, and I was almost like, I think if I hadn't taken the time to actually do this preparation in building a narrative for the day, I would have been kicking myself, but I didn't. I kind of said to myself, you know, I shouldn't have done that, because who am I to think that I am better than all the other traders that tried to go long in the course of that day, and it didn't work out for them. And because I'd done that work, I knew it didn't work out for them, and I just thought, you know, I should be going on the side of the sellers, because the sellers are in control, and every time they're out of control, you know, price goes up so far and then they get back in control. So the trade that I took failed, and I got stopped out, or I didn't get stopped out, but I actually exited myself because I just knew it wasn't working out. And then there was a level on the chart that price went to, and it literally just turned on a dime, you know, and I just thought to myself, that's a trade I should have taken. And I just sat there watching it go down. And later on that evening, about half an hour later, after that, price was coming back up again, and it came back up to another level where I thought, from that narrative is where the sellers would take control again. I just thought, well, I was a little bit annoyed with myself for taking the wrong trade, but I wasn't beating myself up. But I just thought, I just click the button here. You know, it's a demo account. I'm not going to spend an hour watching it or whatever like I have done. I'm just going to click the button, turn the computer off, and walk away from it. See what happens. You know, just for the sake of you know, I just thought I could have done better, I think, is what I'm trying to say. So I turned the computer on yesterday, and that trade was still in play, but it was near the bottom. So I thought, well, you know, as long as the market doesn't gap up, I'm probably going to win that trade, which was what happened. I came home today, turned the PC on, and sure enough, I'd won that trade. So tonight, I went through, I did a bit, I updated my 5-minute chart. The hourly chart and the 4-hourly chart still looked valid, so I kept with that. And then I went through on the 1-minute chart, I did my narrative, I marked off a few levels while I was building that narrative. And by the time I'd finished, scrolled to the left of the screen, and I had a trend line where I thought that you know, price was starting to go up again. Again, I could see sellers were in control, and I think the buyers had one successful trade, and that was about it as far as I could see. And maybe a few of them were still in the market as well, but mostly sellers were in control. So I thought, right, that trend line, price is going towards that trend line. That trend line looks a good place where the sellers would regain control of the market and it'd go down. So I drew a few fib levels from the last swing high down to the swing low, and then intermediary level in between. So I had a cluster of a 38% trade 38% retracement, and 61.8 retracement as well, clustering together, and they are all meeting on the trend line that I had from building the narrative as well. So I just drew a little oval circle on the chart, and I sort of thought to myself, well, if pricing comes to that point, that would be a good place to take a short. So I just sat there waiting for it, really, and waiting to see what happened. And sure enough, it got there, and I entered a bit soon, but you know, I could have got a slightly better price. But sure enough, you know, as far as I could see, the market had gone up to it, it had clipped it, and then it had come back over, and I had a nice little sort of shooting star, and I just thought, well, it's clipped it, you know, that's maybe where I should enter. It turned out to be a bit soon. I could have got a slightly better price, but it didn't really matter, because I think within about 15 minutes it was rolling over, and the trade was progressing nicely. And I started writing up the trade. Well, I started writing up the charts. I didn't really get very far with doing the spreadsheet, but I was just talking to Ken before we started the webinar tonight, and I said to him that I really feel like I've turned the corner, you know, by deciding to do the job properly, really, which is basically all I've decided to do. I'm telling myself that rather than going to trade, I'm not going to trade when I get home from work. I'm telling myself that I'm going to practice doing the narrative. I'm going to practice building that narrative and really study what price has been doing throughout the day, and if I like what I see, I may place a trade. That's what I'm telling myself. So I'm really sort of trying to tell myself that I'm not there specifically to trade, and that's kind of where I am, really. And do I have a trading plan? I think in loose terms I do. I don't think I've fully qualified it. I know what I've been taught by the guy who showed me what he does, and he's very successful at it as well. When you see his results are very impressive. So I know the system works, but it's not anything that you're gonna. It's not an instant sort of. It's not the Holy Grail, you know. I suppose that's the best way of putting it. It's going to take a while, but yeah, it's good. It's good in the sense that I kind of know what I'm doing. I've just got to tune my senses to it. I'm not completely sure I've got a trading plan, but I think I know enough to trade it. I think what I've got to do is hammer out some rules. So, for example, I would put something like I go to my PC, I build a narrative. Hold on, let's try and pin it down. I do some technical analysis on, say, a daily chart, a 4-hour chart, and an hourly chart. I'll also look at a 5-minute chart. So I'll have some trend lines, some resistance lines, a couple of pitchforks, maybe more. And then I would build the narrative, and I would look to see who's in control, buyers or sellers. And then I'd look to place a trade on the side that I think is in control. And if it turns out that it's probably been up and down each day. Market's been up and down equally. Maybe it's going sideways or whatever, but there's a decent amount of play in it, you know, for a long trade or a short trade. So I would look to take either, you know, but I'd look to who's in control. So how do I define who's in control? If you go through a market and you look at, say you look at a 1-minute chart, and you might see a bottom. So you would measure that bottom up, and you'd think to yourself, is there 10, 15 pips in it? So if you measure that move up and it falls short of, say, 10 pips, and then it goes back down again, clearly the sellers are in control. And you just go through the chart like that, really. You know, every time you find a bottom, you look at it and think, well, is the fact the price is moving up now, is that new buyers coming to the market, or is that mainly profit taking? So if it's moving up strongly, then it's probably buyers with some profit taking. But do those buyers gain control of the market? And if there's less than 10 pips there, then the answer is probably no. If there's 20 pips there, then you'd probably think, well, some of the buyers were able to take a trade and get out, whereas many traders are operating on higher time frames because, you know, I'm on a 1 minute chart or a 5 minute chart or whatever, you know, and if those you know, if there's not, say, 10 to 20 pips there, then really those, and the market goes back down again, those buyers are not gaining control. The sellers have got control back, and then the market's heading down again, or vice versa. Yeah, I'm looking at support and resistance on the 1 minute charts, and also support and resistance on the higher time frames as well. So, but what I'm finding is, since I've been developing the narratives, that I often get the level. Well, I say often. I mustn't sort of count too many chickens at the moment, but twice I've got the turning point off of the 1 minute chart. So in actual fact, 3 times, because the first time that I really made myself sit down and do it, and I took the wrong trade. I had the right trade, I had the line on the chart, and it went up to it and it turned, but I didn't take the trade because I'd had my one trade. And then after I'd watched price go down 10 pips and it started to turn around again, and, you know, evidently 10-15 pips there was some profit taking, started to go up again, and I saw that other level. Also, I saw that level, so, you know, that also told me there was a good level there. So yes, I am getting these levels off a 1 minute chart. The trend line I had tonight when I took the trade, and it was a lovely trade as well. And if you look at Euro GBP, just a quick look, it's pretty much been going down ever since I took the trade. It's probably gone down near to 20 pips. I came out at 10, but it still kept on going. And it really, all I did was, as soon as a bottom formed in the market, I watched price go up. In fact, when I got back over to the left-hand side of the screen, price was already going up. I looked at the trend line and thought, well, if it touches that trend line, then that would be a nice place for the sellers to regain control. And then I started looking at Fibonacci measurements on it. You know, I had a couple of fib levels, and I just draw an oval on the screen and thought, if it gets to there, and it was even correlated with time as well, because it wasn't just the price was right, the time was right as well. That was the really amazing thing about it. And no worries, Dave, no worries at all. And yeah, so I'm getting that information off a 1 minute chart as well, and I found, in actual fact, the 1 minute chart has told me more than the higher time frames, which I wouldn't have really have suspected, you know. And you know, before I was literally drawing lines on 5 minute charts, hourly charts, 4 hourly charts. Can I tell you, I wasn't putting any support or resistance lines on the 1 minute charts at all. I was literally just looking at the price action, looking at the indicators that I've got on there, because I do have some indicators on there. And that was literally all I was doing with the 1 minute chart. But since I've been taking the time to build that narrative and to mark the levels on there as I go, and not just support and resistance levels as well, you know, dynamic lines as well. You know, I use pitchforks and
add about,
trend
if I can just, Derek, if I can just add about what you're talking, just to validate what you're saying, going for 10 pips, your longer time frames, your daily and the 4 hours don't mean much. The momentum that they're driving is a different type of momentum than what is necessary. You can have a definite trend, a downward trend in a 4-hour chart or a daily chart, and yet you can still, off a 1 minute and 5 minute chart, you can still take 10 pips on the long side. So you have to correlate what is the profit target that you're going for, and you correlate that to the time frame which is most applicable. For 10 pips, your 5 minute and your 1 hour time frame is most probably the max that you need to go to in order to get a good determination on where the momentum's going. On a 1 hour chart, you can definitely gauge a strong enough momentum that's going to carry you to the 10 pip profit target line, and the 5 minute is a nice time frame to give you enough detail and not get you far too engrossed in the tick by tick movements, because they can sometimes be quite emotionally draining when you start seeing, you know, tick by tick start to reverse against you, where the 5 minute chart buffers that a little bit. But again, like what Derek said, if you want even greater detail in terms of your entry point and your exit point, it's always it can be beneficial to zoom in using a 1 minute chart. So I also wanted to just see anybody else out there, if anybody had any issues in terms of consistency today, just to see if we can touch on some of, you know, Inga's new, James is here, David, and see if anyone has any things that come straight to mind in terms of barriers to their own consistency in following a routine. Anybody add?
Ken, in addition to what you were just saying there, actually, I find that the 5 minute chart works nicely with the 1 minute chart as well.
Yeah. 1 minute chart's good for to zoom in on critical points. Again, it has to be, you have to balance yourself with the 1 minute chart, because you don't want to get too engrossed in constantly watching tick by tick. You want to be able to let go of let price go for a while and not read into price too much, and that's what the 1 minute chart does. So you've got to use it tactically.
The 1 minute can get quite messy, you know, and it doesn't look as smooth as the 5 minute.
Yeah. And sometimes it can detract you out of a trade. I mean, if it starts getting a bit volatile, the 1 minute, once you zoom out and you look at the 5 minute or the 1 hour, and you think to yourself, it's there's nothing to be concerned about. Where the 1 minute can lead you astray, thinking that it's not going in your favor. I think personally, I'm very inconsistent with belief in myself. I go through stages where I don't see how I can ever become profitable, and other times I do believe myself. Being a newbie, I find to be an issue. That comes down to expectations, Inga. More than likely, as a newbie, your expectations are too demanding, and that's what's causing frustration. And therefore, from the frustration, you're going to get bouts of doubt. And of course, you have to doubt yourself if your expectations are wrong. So one of the things that we focus on more than anything is aligning or decreasing your expectations, and that's something that I try to speak about every single week. is to simply tell everybody to start very, very, very small and simply to take one step forward every single day. The point of today's webinar is talking about a trading routine and the consistency in the trading routine. And we spoke about this in last night's webinar. It's much more effective to take a tiny step every day. Therefore, you've taken 365 steps in the year, than to try to take some long strides to catch up, because you'll find that you will always fall. So it's best to, when starting, drop the bar of expectations as low as possible. And even Lev, who's been trading with me now for about a year and a half, he even said that now that he's going to university, he's only trading once a week, and he was trading 5 days a week up until a month or 6 weeks ago. He said that he feels a lot more comfortable and less pressure trading once a week. And that goes into, just by fluke, it ends up going into what's called the therapeutic model, where you have some form of exposure to something that you're doing. In this case, it's trading, and then you give yourself an entire week to digest what happened to you during that one day of trading, and you prepare yourself next week to do another simple step forward in your development as a trader in the next trading session. Where if you're trading every single day, you can get to the point where there's so much information overload that you start to lose direction and balance in terms of moving forward. If you add on top of that what you've implied in your comment here, that there, as a newbie, you don't know where to place your expectations, you can get off the mark and disappoint yourself, not because you're not doing well, it's actually just because your expectations are far too high. So that's something that I'd pass on to you, as well as I pass on to everybody else. Drop your expectations down to not be worried about making a profit. If you're trading a live account, go to a demo account, and first of all, just try to trade the amount of days that you've told yourself you're going to trade. So if it's 1 day a week, or if it's every single Tuesday and Thursday, or if it's every single day of the week at a specific point in time of the thing, try to maintain that consistency. Consistency develops belief in yourself because you can trust yourself. So if I tell myself I'm going to trade 5 days a week, and if I don't trade 5 days a week this week, in my internal conversation with myself, I won't trust myself. Part of me will turn around and say, well, Ken, you said you're going to trade 5 days a week and you only traded 3 days a week. How can I trust you? And this is what we want to, and that's what brings in doubt. That's why you go long, and that part, the other part of your brain turns around and goes, maybe you should have gone short. Then the part who said long says, no, I really we should go long. The part that goes short turns around and says, why should I listen to you? You said you're going to trade 5 days this week, you only traded 3. So this is the inconsistency that creates disbelief and doubt. So if we decrease our expectations and stick to them, we start to develop self-trust, and you can start to trust yourself. And then you start with one trading day for 1 hour, develop trust with yourself, and then you turn around and say, okay, I'm going to do 2 now. For the last month, I've done 1 trading day per week. Now I'm going to build it into 2. And this is the way you take a few different types of categories of your trading, and you just start to build each one. It's just like having 4 flowers in 4 pot plants. You've still got to water each one. And at the end of the day, when you put all 4 of them together in a room, you almost have a sunroom. So this is the way to slowly do it. Consistency is one thing. Getting the direction right is another thing. And you just have these little categories that you work on every single week, moving them forward. And you'll find that if you do it consistently, at the end of 1 year, you'll be trading successfully. Profitability comes with experience. And experience only comes with consistency. You have to consistently do something to gain experience. You cannot get experience without consistently doing something. So every trading successfully is literally a formula. It all comes down to a very, very, very simple formula. And the basis of the formula is to consistently trade, to have a consistent routine, a consistent methodology. And by doing a consistent methodology and a consistent routine, you develop trust. Your internal voice, you can trust it. So when I say go long, I believe myself I should go long. And I'll get it right more times than not, because I keep my own word to myself. And that's what we want to develop. We want to develop a good internal resolve and self-trust. And that means that when you go long, you're not going to be saying, maybe I should have gone short, maybe I should have gone short, maybe I should have gone short. You're going to go long. It's simply going to go long. If you got it right, great. If you got it wrong, it's fine too. I still trusted myself. And then you have to have the compassion and the patience in order to readjust and turn around and say, you're still learning. It's normal to make mistakes. You can't move forward unless you're making mistakes, to reassess and to grow. And this is the way that you keep on moving forward.
Can I just make an addition to that, Ken? When you said about it all starts with trading consistency, with consistently trading, whether you're winning or you're losing. I had that revelation about, I need to do this properly. I need to take the time to build the narrative, to really take time to study the market, all the various twists and turns in the market, what each one of them means. I only had that revelation because I was trading consistently, even when I was losing and feeling, having all those nagging doubts in my mind that we all have as traders when we don't feel we're doing very well or whatever. I had all of those, and the only reason that happened to me, that revelation really struck home when I was sat in front of the computer on I think it was Wednesday last week, was because I was there consistently trading, even though in my mind I didn't feel I was doing very well, and I didn't feel down about it.
The other thing that you've just brought up now, which is very important, is this whole thing about not feeling good because I was consistently losing. So, and about consistently trading regardless of the trading result. Because whilst you're losing, and you're going to lose a lot, especially when you first start trading, you can't trust yourself if you're going to beat yourself up all the time. So before you can trust yourself, you actually have to develop self-trust. And one of the obstacles to self-trust is beating yourself up. And we've spoken about this many times during the course of the last couple of months that we've been running these webinars, is that just society has created us into people who are exceptionally good at beating ourselves up. We do this really, really, really well as a group, as a species on the planet. And in trading and in mastering anything in life, you cannot master something if you're constantly going to beat yourself up about it, because you're not going to have the desire to do it again. So the first lesson in moving into mastery and into profitability is to start to develop a softer approach to yourself. And this is what's happened. This is one of the revelations that Derek has come across, because a couple of weeks ago he was struggling with this whole thing about beating himself up, and we actually did an entire webinar on the subject, is that you have to start to become self-aware on how you're treating yourself in your losses. Once you do that, you can start to soften the voice and turn around and say, hang on a second, how about giving myself a break? I'm only starting. And by doing so, you start to develop an internal voice, which again, you can get to trust, because it's not punitive. so you can actually enjoy it. You can actually like yourself. Therefore, you'll trust yourself and respect yourself and listen to yourself more so because of the way that you treat yourself. So this is a vital thing that every single trader, if they're ever going to progress to mastering profitability, the first step is to get to stop beating oneself up and to start becoming a supportive and encouraging voice in that transformation from being a newbie, a losing trader, an inconsistent trader into a consistent, profitable trader.
Ken, I'll just add another thing as well. When I was beating myself up, 2-3 weeks ago, right up until last week when that happened to me, I was pretty much, even though I was going through that internally, I was also trusting in what you said was correct. So it's not only the fact that you learn to trust yourself, which takes time, but you also trust the process that you're going through and trust the mentor as well, which is giving you the support and giving you that tuition as well. So that was one of the things that was really keeping me in the game was, okay, I was beating myself up, but I was trusting the process that you've put into play and that you're giving, and I was trusting you as well. So, that definitely helps.
That's two good points that have just been written down here. What Irving said, and I totally agree. It's not so much trading is the vehicle with which we can adopt these new behaviors, and the greater benefit, and I speak personally, the greater benefit for me, it's not in the trading, it's actually in my other relationships. The ability to be kind to myself has extended itself, and I am much more softer, much more caring, and much more kinder to other people, whether it's people I just met or to my family. The second point that Inga has mentioned as well is very important. This ties on to what Derek just said now. It is very important to be in a community which is adopting different behaviors to what we're normally accustomed to in the rush of every single day. So, once or twice a week, we get here and we speak about peak performance. And there is a formula for peak performance, and one of the aspects of peak performance is to have a support group that will continue to build an encouraging environment. So the other guys know this. You might not know this, Inga, if this is your first time. And I had an Olympic coach for 4 months back in 2016, and one of the things which he told me straight away was that it's essential to scrutinize who is part of your environment and to make sure that that environment is supportive of becoming the best in a chosen field. And so when someone gets picked for an Olympic sport, the coaches will sit down and scrutinize who is a part of this athlete's environment. And the same way in trading, it's the most competitive sport in the world. There is hundreds of millions of people every single day engaging in the markets. There are trillions of dollars at stake. It is fiercely competitive. And if you're not in the best state of mind, and I've said this to the guys over the course of the last couple of months as well, trade on your terms only. If you're not in a peak state, do not place a trade, simply because there are other guys out there who are in a peak state and they will take your money from you. It's as simple as it gets. The market demands, it's so competitive, and it's such a difficult thing to master. It demands that you be in as good a condition as you can possibly be. It demands that you be in a peak state. This is the attraction of trading the markets. It demands something higher of yourself. And so this, as Irving said, flows on into the rest of your life, simply because you have to adopt different behaviors. And having a group that constantly speaks about this just keeps you moving forward in supporting those beliefs that you're trying to adopt. Yeah. Stop criticizing others. Yeah, that's a big one. That's a big one, Irving. I had to go through that myself. It's a very, very critical society. We live in a people who criticize are rewarded in society, but it actually doesn't happen in trading. You can't be critical and be very successful trader unless you're critical and very supportive of yourself, but that doesn't last for too long. You can be financially successful, but when you're criticizing everybody, you don't have many friends. So and your relationships aren't that good. So the long way, the way to trade successfully and have endurance as a trader and be able to trade, for 20, 30, 40 years and consistently be making money is this approach, and what the opposite, or what confirming what Irving said, and that is you actually don't become criticizing, because your frame of mind in trading, you want to look for opportunities, right? That's what's called a positive expectancy. You can't be critical and have a positive expectancy, because they're actually the opposite of one another. If you're critical of everything, then you're going to be negatively focused, and you're going to be saying, oh, this is just wrong in the market here. But it's very difficult to find something wrong and choose to do the opposite thing. There really are a very small group of people who can find something wrong and choose to do the opposite. Usually people will find something wrong and continue to follow that frame of mind, or as you say, that narrative. They'll continue to look for something wrong. But in trading, you don't want to look for things that are wrong. You want to look for the thing that's right. I want to look at where the direction is going as opposed to where it's not going. So being critically minded is not conducive to successful trading. So again, Irving's point of becoming less critical of others is a behavior, and it ends up being a value and a belief that we start to adopt, and that then shows itself in being able to find what we are looking for, positive moves in the market, as opposed to criticizing the market. Yes. Yeah. And well, if you criticize others, you're criticizing yourself. And if you're criticizing yourself, that's the definition of beating yourself up. You can't be successful because you're not encouraging yourself. Trading is hard enough that if you're not encouraging yourself through the tough times, there's no chance that you can get through. This is why most people don't progress outside of being a inconsistent, losing demo trader. Most people never progress out of that. You have to be very, very positive, very optimistic, and realistic at the same time. And the realism comes in the form of, I know I'm going to make losses, and I know this is going to take time. That's the realistic part that we all have to accept. The optimism is, I know that if I consistently do this and apply myself, I know that I will become a successful, profitable trader at some point in time. That's the balance between realism and optimism. There's no room for pessimism whatsoever. That's just you might as well stop. So realism and optimism as a balance is excellent. Too much optimism and you're not going to do what's necessary because you're not going to be realistic as to where you are today. Yeah, so my routine is primarily all about it's all about psychophysiology. So I use a wearable device that monitors my heart rate, my breathing, and my perspiration and my temperature, my peripheral temperature. Sometimes I use a larger machine and I'll monitor my thoracic and abdominal breathing whilst I trade as well. My routine is, I do that, I don't know, it depends. Most days I try to get myself into a peak state through abdominal breathing whilst I'm looking at the markets. I'll place a couple support resistance lines, but at most I'm looking simply at a profit target first of all. My first question is, what is the direction? Second question is, what's the profit target? And my third question is, when am I entering? I wait, especially now with some algorithms that we have, I wait for a biological signal to be generated, and the software itself will take the trade for me. So that's my routine. But meditation is definitely very important because meditation slows the mind down. And if you slow the mind down, you have less internal talk, which means that the probability of having doubt and second guessing decreases. The more you talk to yourself, the more perspectives you're going to generate, and that just breeds indecision. So meditation is good, but meditation including abdominal breathing, because abdominal breathing activates the pelvic splanchnic nerve, which pushes you into a parasympathetic disposition, which creates vasodilation, and that then allows you to perceive the markets better. It regulates your heart rate, and you end up biologically having what's called a positive expectancy. But as biologically, not psychologically. Psychologically, of course, you do as well. But biologically, you get into a state of positive expectancy, which generates neurologically the state of peak alpha. And you want to be in a state of peak alpha when you're making decisions. So that's my trading routine and system.
Yeah, I just answer Inga's question as well, because I know Inga asked about your routine, Ken, and also mine. Mine is more gravitated towards looking at the charts. I think really, to be honest, I'm still building a routine, but at the moment it's to look at the charts, do some long-term technical analysis on, say, a 4-hour, 1 hourly chart, 5-minute chart, and I probably also want to look at the daily as well. But and then it's to get that narrative down on the 1-minute chart, which admittedly I've only been doing for, since Friday. I did it properly. Thursday I kind of sabotaged myself, didn't get to do it properly, but that is definitely a new addition to my trading routine. And then I'm really trying to get to the place where I'm adopting the routine that Ken is taking, because being that I'm doing the exclusive dealership for NeuroTrader, I want to get to the place where I'm using it myself, where I'm making sure that I'm in a peak state as well, which at the moment I'm not really doing. I guess I must be in a reasonable state because I took a trade tonight and I won, and it felt good. I felt calm throughout the trade. I didn't feel panicked. So really, I'm kind of in that place where I'm doing the technical side of things, and then I'm trying to relax. I'm doing the best that I can to relax, to remember to relax, and start thinking about how I'm feeling about the trade. Where am I relaxed? Am I, can I do some diaphragmatic breathing before I take the trade? And I'm really trying to build that routine. So my routine is very much in a state of flux at the moment. It's not anywhere near as organised as what Ken's is.
That's excellent. But the point is the awareness. The point is having the awareness and starting to see the benefits of it. This is the point. And we all have to expect that there are going to be days when you're not going to be in that state. And yet it's the constant reminder, which again goes to the point that Inga made about having a support team. It's very important to speak about these things every week, because it just reminds you and creates greater support for that behavior during the course of the week. So it's easier to remember things when you speak about it often. So it's excellent. It's wonderful that you're moving towards that, and that you're clearly getting benefits of it, and that you're clearly starting to implement it into your routines. It's excellent.
Well, if you had said start trading, Ken, I probably wouldn't even be saying this. So it all started with making a start and making that start consistently as I can.
It's excellent. It's excellent. It does. And I want to state it takes a lot of courage to trade, and this is so. It takes a lot of courage to trade with losing results, and to continue trading. It takes a lot of courage. So really, when you think about what's happening, to beat yourself up whilst doing something difficult but still having the courage to do it is so crazy. Really, we should be very complimentary of ourselves, given that we're doing something for no reward, and still having the courage and the determination to follow through and do something even in the face of losses really deserves to be applauded. We should really give ourselves a lot more support than beat ourselves up, because we're actually doing something which is very, very difficult.
Yeah, and any other profession, or let's say any other walk of life rather than profession, but any other walk of life, you said to someone that I'm doing something that makes me feel depressed, it makes me feel down because I'm not doing it very well, they probably say to you, well, stop doing it, do something else that you're good at, or whatever, whereas if we're serious about it, we don't get that choice. We have to sit through it, do it consistently, whether we're enjoying it or not, whether we're winning or not, and you have to push through it.
Because the thing to be careful of with that comment that you said, that other people can turn around and, well, if you're not liking it, do something else. The problem that can occur in that mindset is that you're constantly changing and doing new things. You're never sticking to anything.
Yes.
Things get a little bit tough. Oh, I'm just going to try something else because this is not working. Where really you have to go through. There's a good book, and it's I'll find it. It's downstairs in the library. There's it talks about the whole phenomena of going. It's called the dip. I think it's called the dip. And the guy has written a really nice short book about, first of all, you have the excitement of something new. And then right after that, you actually, every single thing that anybody does, it's not just trading, it's anything, there is a dip where you find things very, very difficult. And it's only when you go through that and start to build yourself back up that you start getting consistent results. I'll find the book and I'll email it to everybody. It's an excellent book, very, very short, but it speaks about this phenomena that every single trader goes through. First, you have the excitement, the beginner's luck, then you go downward into this place of consistent losses, not wanting to do it, And it's only by being consistent in those times you actually get yourself out of it. So I'll send everybody the name of the book. Really good book. And it's really short too. It's a very, very well written, very concise little book.
I take it that is actually a trading book, Ken, or does it have that
No,
other
it's not a trading book.
applications as well?
It's just a business book. It's not even a trading book. It's just a business book. Yeah. Yeah, I'll send it to everyone. Does Derek? Do you have Inga's email address?
No, I was going to ask about that. What I was going to say was, would you like to mentor with us? We've got a mentorship program going. It's very straightforward. You trade when you can trade, and you trade once a day, so it's not overly demanding, and it's it's just a course that we're all on. It's pretty informal. You can do it for free. Just get a demo trade, do some demo trading, one trade a day, and we just mark our results up in a spreadsheet or a couple of spreadsheets. We've got a consistency spreadsheet, which is just have you traded, have you not traded, and then we got what we call a liker sheet. So how much do we like the trade? What was our state of mind when we took the trade? So it's all quite streamlined, really, and it's just I think there's definitely a progressive path to it, but at the moment it's a fairly relaxed environment to start to learn to trade in, and we've got Ken overseeing it all. So really, it's a very good plan to get.
You trading at a prop firm, Inga? Nice.
Oh, cool. Okay. Can you just put your email?
Yeah, pass Derek your email address, and I'll shoot over the email, or Derek will shoot over the book to you.